Hi guys, good evening. Welcome. We are going to be starting from Introduction to Forex Trading. What is Forex? Forex means foreign exchange. It means the buying and selling of different currencies. For example, you have naira and you want to get dollar, and you go to a bureau de change person and you change your naira for dollar. That transaction is a foreign exchange transaction. But when it comes to trading, it is quite different, but it's the same. So in trading forex, we are exchanging the relative value of one currency against another. Okay, so in the forex market, we make money in two ways. Make money either by buying or by selling. And what are we buying and what are we selling? We're either buying or selling currency pairs. And we buy when the market is pushing up, and we sell when the market is pushing down. And the forex market, our main focus has to do with the buying and selling of currency pairs. I will explain currency pairs as we go, but let me show you guys something. It is not only currency pairs we can trade. We can trade stocks, that people that trade stocks. We can trade funds. We can trade futures. We can trade forex, which has to do with currency pairs. We can trade crypto. We know crypto now, BTC, Ethereum, and the rest. Solana. We can trade indices. We can trade bonds. We can trade economy, and we can trade options. So all of this in the trading industry, you can trade them. But when you're trading Forex, you're trading currency pairs. And before I get there, my screen, what you're looking at, what you're seeing is called Trading View. This is Trading View. We do our market analysis here to determine if we are going to buy or to sell. And at the beginning, I said that we buy when the market is pushing up and we sell when the market is pushing down. Okay, so now what do we mean by currency pairs? What do we mean by currency pairs? Currency pairs has to do with the combination of two different currencies. Let's scratch this and just go straight to currency pairs. Currency pairs has to do with with the combination of two different countries country currencies. I don't know what's wrong with my letter O, but we move country currencies. So currency pairs has to do with the combination of two different country currency. So as you can see on my chart, we have GBP, JPY, and now GBP stands for Great British Pounds, and JPY stands for Japanese yen. And these are two individual currencies, that are combined together. So when two currencies are combined together, it is called a currency pair. What did I say? When two currency are combined together, is called a currency pair. So now we know British pounds is used in the United Kingdom. That is the currency of the United Kingdom. And we have Japanese yen, which is used in Japan. So this currency pair is a GBP currency and a Japanese currency brought together, forming the GBP JPY currency pair. It is a currency pair because two currencies are brought together. Now we have the Euro USD. Euro is a currency on its own and US dollar is a currency on its own, and they are both brought together, and together they are called a currency pair. Euro is a currency on its own. US dollar is a currency on its own. We know euro is used by European countries. We know US dollar is used by the United States. So together they are called a currency pair. We have GBP USD, the GBP and the US dollar. Let's take it back to GBP JPY because I think that's where my note is. Okay, yeah. So we can also have let me just write it out so that you guys can understand. Examples of currency pairs, e.g. GBP JPY, GBP AUD. When you hear AUD, you're hearing Australian dollar and the US dollar. Which other one? We have CAD slash USD. We have USD CAD. We have, there are so many GBP AUD. So this GBP JPY is the Great British Pounds and Japanese yen. AUD is Australian dollar and the United States dollar. CAD USD is Canadian dollar and the United States dollar. USD CAD, US dollar and Canadian dollar. GBP AUD, Great British Pounds and Australian dollar. So we have a whole of them. USD JPY, United States dollar versus the Japanese yen. Euro GBP, Euro AUD, Euro NZD. So Euro CHF, US dollar versus Swiss francs. Euro US dollar versus United dollar. CAD JPY, Canadian dollar versus the Japanese yen. So each currency pairs has their own chart. So what you're looking at is a chart, and on this chart, these purple and black things are called candlesticks. Is This candlesticks helps us to do our analysis and is going to help us to determine if we want to buy or to sell. We'll learn that in the future, subsequent classes. Euro USD, this is the chart of the Euro USD. This is the chart of, let's go to another pair, USD JPY. This is the chart of USD JPY. This is the chart, this is the market. Let's look for another one. This AUD USD. This is the chart of AUD USD. We also have metals. I did mention metals. We have metals. We have XAU. Okay, it's not a currency pair. That's why we can't see there. We have XAU USD. This is the chart of XAU USD. We have silver and so many others. With time, you will get to understand them. So let's go back to GBP JPY since my notes are there. Currency pairs has to do with the combination of two different country currencies. So moving on, we have something that is called the base and the quote currency. Let's move this up so we can have space. Now there is something called the base and quote base and quote currency. Now the base currency. The base currency is the first currency you see when you open the chart. The first currency that you see when you open the chart is the base currency. Let me just write it out. The base currency is the first currency you see when you open the chart. Then the quote currency is the second currency. Okay, so the base currency is the first currency you see when you open the chart. So now this GBP, GBP is the base currency because that is the first currency, GBP, and it is the owner of the chart. So the base currency is the owner of the chart. Please listen. The base currency is the owner of the chart. So this chart now that you're looking at, the owner is GBP. Are you guys understanding me? Or rephrase. The base currency is the first currency you see when you open the chart. It is the owner of the chart. So it means that this chart now is the base currency. This GBP is the base currency for this chart. GBP is the base currency. And the base currency is the currency whose value is being measured or priced against the second currency. So now, this second currency is the quote currency. The quote currency is the second currency you see when you open the chart, right? So now, all these price are quoted against the base currency. At every point in time, we want to know, at every point in time when you open a chart like this and you see this price, it means that you need 214.934 Japanese yen to buy 1 GBP. 1 GBP. I will rephrase. This base currency is the currency that want to know how much to buy or how much to sell. No, I'm just trying to look for a way to break it down. Okay, let's use BTC for example, because I think that is something most of us are familiar with. At every point in time, let's go to a BTC chart. Let me look for a BTC. That's under crypto. Okay, now when you open BTC USD, BTC is the base currency. USD dollar is the quote currency. Who owns this chart? BTC. We want to measure how much BTC, how many BTC we can get with the United States dollar. Okay, now you will hear that. Oh, BTC is at 50K, BTC is at 70K, BTC is at 80K. This is the price. It means that as at now, the current market price of BTC is 63,792. So we need 63,789 US dollar to be able to buy one BTC. If you want to buy two BTC, you need double the price. You understand? I don't know how to explain it again because I feel like BTC is that pearl we are more familiar with because it's anytime it's moving, we're always in the know. Most of us are always in the know. BTC has gotten to 120K, BTC has gotten to 90K. Oh my god, BTC is pumping. That price you are seeing there is telling us the value of one BTC. Now, okay, let's look for another pair. Let's take for gold. Let's look at gold. XAU. Let's look at XAUSD. This is gold chart. This is the current market price. At this price, it means that we need 4,353 US dollar to buy one gold. So gold is the owner of, we want to know how many of the US dollar. So the base currency is just like telling us we want to know how many of these US dollar, how many of the quote currency can we use to purchase the base currency. With time you guys will understand. It's not a one day thing. With time it will begin to make sense. So that's just what base and quote currency is all about. The base currency is the owner of the chart, the quote currency is the visitor. The base currency is the currency that we want to measure, we want to know how much we can get it, one of it. So let's go back to GBP USD. GBP JPY rather, that's where my net is. So moving on, we are going to be looking at Forex trading sessions. I'm going to try to be brief. I don't want the video to be so long because when videos are too long, it becomes boring and tiring to watch. I can relate, don't worry. I was once a beginner. So let's take all of this out. Now we're going to be looking at Forex trading sessions. Here's my text. Trading sessions. Trading sessions. I don't just know what is wrong with my O. I don't know what is wrong with it. So we have, okay, what do we mean by trading sessions? Trading sessions are the different times of the day when major financial markets are open and actively trading. So at every point in time, there is a particular market that is active. So that session, it means that, okay, this particular session is active, the market is more active in this region than in other regions. So it is a specific period when a particular market is open for trading. So now we have different types of Forex trading sessions. So every time you understand, we have the London session, and it opens around 7 a.m. 7 a.m. to 4 p.m. Nigerian time. So it means that if you trade within 7 a.m. to 4 p.m., it means that you are trading when the London market is open and active. So the market in London is very much active. The financial institutions in the United Kingdom at that point in time, they're active. We also have the Frankfurt session. The Frankfurt session, which is open between 8 a.m. to 5 p.m., means that market is active in the Europe at that time. So based on what we can see that the London market opens at 7 a.m. and it closes around 4 p.m. And when the London market is still open, the Frankfurt market will open to Abi at 8 a.m. So that is what this is about. Then we have, so the Frankfurt market has to do when the market is active in Europe. Financial institutions are active in Europe that time. We have the New York session. I don't want to be adding the session so it doesn't look too tacky. The market opens at 1 p.m. and it closes at 10 p.m. Nigerian time. So currently, because I'm making this video at 5:46 p.m., means that the New York session is open and is active. So if you are trading at this time, just know that you are trading the New York market. And the New York market is the market that is open at this time. We also have the Sydney session. Sydney session market opens at 9 p.m. and closes around to 6 a.m. And we have the Tokyo session, which opens at 11 Tokyo, which opens at 11 p.m. and closes at 8 a.m. to 8 a.m. So there's one thing I want to tell you guys. At every point in time, it is best to trade when two market is open. Sorry, two sessions are open, because at that time the market is volatile. So it's good to trade when two sessions are open, two or more sessions are open at a particular time, because the market is volatile at that moment. And you might be wondering what we mean by volatile or volatility. It means the market is moving quickly, the market is moving well, and we don't want to trade when the market is doing as if it's received heartbreak. We want to trade when the market is moving well and quick. You understand? So that's what we mean by want to trade when the market is volatile. So I think I should probably stop here, because I still want to go into time frames and types of traders, but I think we should take it one step at a time. Watch, digest, understand. If you have questions, ask in the comments. I will respond. So that is all for today. Soon I'll drop a video on the time frames, types of traders. Then gradually we start going into serious business, where we talk about pips, lot size. Then we go into technical and fundamental analysis. Okay, bye guys.